Hello and welcome everyone into today's class. Today, guys, we're gonna mainly focus on Q&A session, and then I will if I get time, I will look at some of the trade recaps, and then we will start off with looking at all the ETFs in the markets, and then we'll see where we stand after today, and then we'll also develop a game plan for tomorrow, looking at a spy chart mainly, and then I will also take a chart request too in the end. So the whole session is going to be around 30 to 40 minutes, so stick around till the end if you have any chart requests. So let's get started with spy. Looking at spy daily chart, not a good looking chart on the daily. Again, I expect a little bit of downside in spy in my weekly in my weekly session, and then today nothing much happened. My bad. Nothing much happened today. Market was a gap down. This is what we expected. Gap down in the markets, and then we were short the markets with in the money puts for April 1, and puts went I think 25 to 30% off open. Closed the puts, went long near the bottom, and then also got this move for 20%, and nothing much happened all day today. So did not take any other trades. Looking at the daily chart here on spy, not a good looking chart on the daily, or I would say 4 hours to hourly. Daily looking like a shooting star, and then 4 hour structures changed here. So not, I wouldn't say this is a bullish here at all for now. Price making lower highs and lower lows. So, and the next possible demand zone I see is around 516, 517. So there are high chances price can test this demand zone. If price tests this demand zone, I think this can give us a really nice long opportunity with the very tight stops. I would use 514 as my stop, and then the next demand zone is right below here. But I don't think price is gonna go that far. But anything can happen. But the main thing is to have a game plan. And so for now, the game plan is we're gonna go long in this demand zone on break of this today's low support, with the easy targets of 516 to 517 here. And then looking at also the volume shelf, I am plotting this volume shelf from these lows here, from this March 15 lows until today. Looking at there is a bit of a gap here in the volume gap. So if price managed to close below here, on 15-minute or 30-minute time frame on intraday, then I think we can definitely see some downside, and then price can fill this volume gap up until this demand, and then boom, another bounce up here. Looking at Qs, same chart here. There is no change to the game plan. Looking at 4 hours today, nothing much happened. We got 1.5 point close, or red close here, and the next demand is around here. This is demand zone. So one more lows, definitely possible here in Qs, and then boom, another bounce to new all-time highs. Looks like also closed in supply zone here. That's a clear supply zone. Price went up to this supply zone caused break of structure. Price made a new lows, and then end of the day, we saw a ramp up into the supply, and then end of the rejection here of the supply zone. Pretty typical bearish structure here on smaller time frames that you would normally see. So definitely expecting one more lows here in Qs, and then we can see some easy longs. IWM played out pretty nicely. Yesterday we identified this supply zone. If you were not here yesterday, there is a recording up there on the YouTube. You can see we quickly identify this daily supply zone. Look what happened: bearish engulfing, the shooting star followed by bearish engulfing. Inside day today, another shooting star. Today candle, price went up to this supply zone today, gapped up, went on this supply zone, tagged it, and spent whole day here, and then boom, dumped end of the day. So I think looking at IWM, I'm pretty kind of getting a little bit more confident here that there's ABC in play in IWM, and then looking at IWM also, chances that the whole indexes are gonna correct here for next leg down for wave C of wave 4. That's what I'm expecting from the market. So nothing much. It high chances. It can be a choppy downtrend too. As this is what happens in a down in an uptrend. So whenever market feels a little bit toppy, either market goes sideways and then correct it for some time. I'm looking at it, sideways correction, and then in this, you're not gonna get any trades, just a chop, and then market is ready to move higher from next leg higher, and then boom, aggressive move higher, and then looking at this, even though price is coming down, but you cannot really trade it on intraday time frame where you can hold your trade for long. And look what happened, just this choppy downtrend, pretty shallow, a downtrend in the markets, and then this is what you expect in a full blown uptrend market. And then I'm also high chances that we can see another choppy downtrend in demand, and then boom, a clean move of this demand zone. If we do tag this zone here, looking at ES, chances are we might not even tag that zone. So I'm not betting on it anything. So I'm just playing day by day, unless the structure is clear to me that we are bullish. Again, guys, even though I know the price is gonna make new all-time highs here, but I'm just not gonna enter here at any level, because price is not in my zone. And my zone, I showed you, if it's that demand zone. If it goes there, I will comfortably take a swing, but I will never take a swing anything in the middle right here. But if tomorrow price starts breaking out this level here, 52 89, then we can see some nice upside here on SPY, right? So I'm prepared to play the both sides. Looking at banks here, XLF, we expected a red day today on XLF, and look what happened today. Close at low of the days, and this is the next demand zone. Same setup as SPY. But a little bit of further away downside here, more coming possible in this easy longs in this demand, and that this is definitely not the top here, and chances we go to this demand zone, easy longs with the stop loss at 40.53. So for now it is in no man's land. So only day traders there, no swings on indexes for me. Semis held up pretty well today. Even comparing to Friday was a weak close for SPY, or even a day before. And then looking at today, it was also again a weak close for SPY, but semis holding up pretty well. So semis definitely on high watch for me tomorrow, because looking at Nvidia almost made a new all-time highs today, and then AMD news didn't do much damage to AMD. I was expecting price to go in this demand zone, and then I was gonna go long in this demand zone, but price never went there, so there is no point for me taking a trade without a solid reason. So back to semiconductors ETF here. So sideways action, very clean levels here, very clean levels. 3 days of sideways range, a big move is coming, and it's definitely on the way. So I'm watching 220, 230, cycle level, and then 224.85 to the downside. So sideways action, we have a gap to fill to the downside, and then this is the only demand zone I see. Price break this, tag this demand, and then move to the upside. Break higher, currently in a supply zone right here. Currently in a supply zone, rejecting it, wicking it 3 days back to back. So if it starts to break down, then it's just gonna get confirmed that this supply zone is working, and high chances we can fill this. We can see bears filling this gap, and then bulls showing up in the demand zone. What else? Let's go to red list. Let's look at ARC. Solid day in ARC, but looks like closing in supply zone today. That was a daily supply zone, which caused a break of structure in a smaller time frame. So closed inside, tagged daily supply zone. So a little bit of rejection, but not a lot. So as long as bulls are protecting this 51, bears are protecting 51.34 level, we can see a dump back into this daily demand, and then move higher. Dow Jones, we close on Dow Jones, we expected it, and then looking at this time that we made yesterday, retesting this prior all-time high, so that's that definitely a big level to hold for bulls here at this point, 392.90. Again, watch Dow Jones tomorrow. If it starts to break down below this level, then it's kind of get it's gonna get confirmed that bulls are giving up for a short amount of time, and then this particular demand zone can get tested here. So keep an eye on this one. Looking at SWIX, sideways day again, inside day on it. So only one level I'm watching, same level of 41.75. Bulls holding 41.75 and then breaking above it, and then pushing it to all-time highs. It's gonna, and then SPY is gonna go to all-time highs too, right? So 41.75, chances are we're gonna see a fake out, right? But can't say yet. So I'm just gonna play the break. Not I don't want to predict anything unless price is in my zone. Yes, any other questions you guys have, do let me know in the chat, and then I will answer it. We looked at most of the ETFs here. I don't think there are many ETFs left. These were 7 or 8. These are the main ones, and then we can look at some of the key names here, like Apple. Apple's looking good here. Closed in this hidden supply here and rejected. So kind of a doji candle on the daily time frame, setting an alert at low of the day 169.40. We break it, and then you guys know my target is around 165 to 164 here on Apple, before moving higher on it. AMD, we looked at AMD. Not yet interested in AMD. Let's look at WIX. We close for WIX, kind of rejecting supply here. So if I am expecting WIX to test these lows here around 1237 and around 1183, which was its 52-week lows here. Price test this. I think price is gonna test this lows, and then gonna make its way to around 1130, and they're gonna make 52-week lows. VIX crush is equal to market rips pretty soon, but for now I think one more push higher in VIX. Looking at hourly time frame, today VIX gapped up, filled this gap, so one more push higher here in the supply zone. Looks like ABC in play here in VIX. Looking at hourly time frame, yes, that is the only supply zone I see. It did not get tested today, so chances are they test it sometime tomorrow or this week. ABC is in play in my opinion. Gap is filled. Let's see how it plays out. Let's see how it plays out. I think these 4 days are just gonna be a little bit choppy, but looking at ES, guys, again, I'm gonna tell you one thing. If we are in this uptrend market, and then we can see this clear bull flag, and there are high chances bulls are definitely in control, and this is not the top, and this is a bullish pattern. I'm not saying it's just gonna play out 100%, but if whenever price goes down, and then whenever the top is in, we do not see usually this type of action. Whenever the top is in, guys, we see a clean move to the downside, consolidation, clean move to the downside, and then price usually make lower highs, and then bearish patterns. Let me show you what I'm talking about. It's right here, right around here. Price clean move down. You can easily trade this move. Look at it. Easy moves down, and then bearish patterns in ABC, and also a nice bear flag, and then followed by another clean move down, because it's clean move. This clearly shows down price is in a downtrend. There's no reason to go long, and then you look at clean moves down here, and then this is something that you do not see in this whole uptrend here. right? This whole uptrend, all the sideways action, they were pretty choppy right here, and then there were no signs that top is in, right around, here, pretty choppy, but a little bit tradable signs, and then a clean bull flag here, another bull flag here, right, another bull flag here, right? So you see what I'm talking about, right? So price is definitely still bullish here in going forward. Yes, it can definitely open up with the gap. Definitely can open up with the gap up. Guys, again, I'm gonna take some questions here. If you guys have any, regarding anything, or if you want me to look at any charts, feel free to let me know in the chat. Again, guys, I took XPEV as a swing overnight. The reason for me to take a swing on that one was pretty simple. Bear flagging here on 1 hour, and I think price can break this lows here, and then there's a big gap to fill around. There's a big gap to fill below. So my first target would be, again, this is a bull gap. So my first target is 823 on this, as long as price is holding below this today's high, or this gap on the upside. As long as price is below this level, I'm expecting price to make another lows here, and then can test this support around 823. Looking at V arrows, also looking a little bit bearish here on the daily time frame. Not a good close here for the bulls here, right? And then it also have, this is the only demand zone, one of the demand zones, so it's, it did not get tested. And then also have this gap to fill. Looking at Hong Kong index, up, breaking down, it's gonna open pretty soon. Looking at the futures, sideways here on the future. So nothing much. So that's the reason I got into XPEF puts. Looking at Ababa here, uptrend breakdown, weak close, so can definitely go even more down here. Again, guys, I will post my analysis on SPY in the free ideas for tomorrow. I already posted one, but I will update it either today or tomorrow morning. Gold, let's look at GIT. First look at gold futures. Bulls are defending this 2149 level inside day. I mean, for now, it is bullish because the structure is not changed. I kind of expected, price to break this 2150 level, but bulls are holding this level. So bulls are pretty strong so far. Pushed higher inside day, another inside day here today so far, double inside day. So can expect a little bit of chop here. So watch, as long as daily levels are holding, or 2150 is just the one level for bulls and bears at this point. And then looking at GLT, yeah, same thing, guys. 200 or 199 is the level to hold for it, but looking a little bit toppy here, with this candle. And then looking at, looks like 5 moves up are kind of done here. Here, this is wave 1, 2, 3, 4, and 5 moves. Looks like 5 moves are done, but not confirmed unless 199 is not breaking here on gold. So only then we can turn bearish on it for short amount, but it is definitely going a lot higher. Looking at, it's the weekly or monthly breakout here on gold. So if we look at right here, so I think gold is definitely going a lot higher. I'm targeting around 236 on this one, because if you guys see, a monthly candle is closing in 2 days, and then looking at gold, and the chart is looking like this. It's almost a 3 to 4 years breakout, and then the candle is closing above it. Looks like a pretty strong candle to me. Looks like the next wave 3 is coming to gold on this, golden pocket bounce. And then, even if we go this flag breakout, 160, 161, yeah, so it's definitely going to 236 is my target on GLD going forward. So another, I think, 20 to 22% upside is definitely possible here. The same example I'm going to show you in SPY chart here. What I'm talking about here is how these big moves can come after this monthly breakouts. I mean, look at it. This was a monthly breakout on SPY here. Look at this monthly breakout on SPY. What happened after? Just a lot of sideways consolidation here, and then boom, another breakout. If you just watch this level here, almost a 1 year sideways consolidation breakout, another retest here, and then boom, just unstoppable after that on the monthly breakout. Do not ignore it. I mean, look at this, a semiconductors ETF monthly breakout base here, massive base on the monthly, 3 to 4 years of base, nice base, and then a flag, and then look at this, explosive move. So high chances we can see the same move here in gold. And then I would, if we get a retest in a month or two of this same level in this demand zone, this monthly demand zone formed, then I would definitely go long gold here with a target of around 236 on it. And looking at just gold alone, yes, definitely looking bullish. Yes, any other questions you guys have, let me know. And again, guys, there are most things, this is on my YouTube, mainly, how I trade, so what are some of the setups, that I like to trade. There's a good video on SPY, on where I talked about how to trade a SPY every single day. If you have no plan, or if you just if you work and then you don't have time to look for the charts, I explained one of the easiest strategies on how to trade SPY every single day. So CVS, let's take a look at CVS. We close again, just pushing higher and higher, even though after this weak candles, but hourly shooting stars in play. Looking bearish on the daily chart, but it's just not gonna get confirmed, unless we break these 78 20 levels. Right, this 78 40 or 78 20 level, if unless these levels are not breaking, it's just gonna stay bullish. And then also watch these daily magnets here. Daily magnets are holding. Watch daily magnet 8. Daily magnets 8 holding, prices in a clear uptrend. So even though the price is looking like it's gonna go down, but they're just gonna push higher and higher, just making these candles. But so it's better to look at by looking at the magnets, and then also some of the hourly levels here that I just gave. I tried trading these names on intraday time frame, but you just cannot really, unless you just a long-term holder, or you have couple weeks out calls or puts. Only then they can play out nicely. Comcast looks like it's bull flagging here. Looks like it's bull flagging. Needs to hold this 4160 level for it to move higher on a daily time frame. Looking at hourly is just a chop for now. Hourly is a chop. Bouncing off this, needs to break above 4288 to make a move. Yes, 4288 move. Spice guys, again, I know most people say this, and I want to say this myself too, that short week, it's a low volume, and then this better not to trade. But again, guys, I remember so many short weeks where I traded a lot, where I where I seen a lot of trend days too. I remember it was, I think, I don't know, 2 3 months ago. There was a short week, and then all 4 days I got, I think, 2 to 3 baggers every single day. So do not go with the mindset in the markets that there's nothing's gonna be happening in the market just because it's short week. Just play the setup. Just play setup. Does not matter if price is in a good demand zone. If price is breaking up, upside or downside, and it's a key level, then the volume will come eventually. So you just play the setup and then do not care about this stuff, because these things, as this week is a short week, next week I don't know, it's gonna be FOMC, and another week is gonna be CPI, right? So so this is just narrative, guys. All these traders push out there not to trade. If we think like that, then we just cannot trade half the year. MACD. Weak looking chart, definitely weak looking chart here. Needs to hold this zone here. Today's lows basically needs to hold, but looks like it's just not gonna hold it. Looking at another consumer staples name, Pepsi. Pepsi and supply. Let's look back at MACD. Needs to hold this 277 75 level. If not, then this is the next demand zone I see, which is around 272 to 270. We break it, I think the easy move to the downside here. Yeah, definitely looking good on the break, on the low of the break today, and then it can definitely move lower in this demand zone. Spike can hit the 590 to 600 by mid-April, even May. What is it? March, May. Look at SPY. Not 600. Not 600. It's pretty. It's 80 points. That's a lot. I mean, guys, look at it. SPY moves higher and then goes sideways for a month, right? This was a time price moved higher a little bit here, and then on December and this whole month of January, sideways action. Moved higher. This whole, and then this whole month of basically half of February and then half of March is sideways action, right? And then it's possible it's gonna be another move higher, sideways action, right? And then we can see if the market is gonna correct here or not. So 596 are definitely not possible by mid-April, May, June, July. But we can definitely see around 530 to 540 is possible. Long calls, guys. Again, if I want to get into long calls, this is not the time to get in. To be honest, this is definitely not the time. I would play swings. Basically 1 to 3 weeks out. That's it. Price is in demand. I would play long calls at this point. Definitely it's, again price is up a lot. Again long calls I would play when they become cheap. And and we see this type of correction here in the market, or at least a sideways action for almost 2 to 4 weeks or 6 weeks of sideways action in the markets, and then all these calls gonna become cheap again, and then market is gonna get ready to move higher, right? Only then. But definitely not a good idea to get long calls, especially 6 months to a year out. I would play on a weekly basis. I mean, I took a small short overnight position. Nothing much. Only got 5 contracts for in the money puts for, I think, April 5. Yes, for April 5. In the money. These were, I think, $6 a con. So only got like 5 contracts. So if we price goes into there, gonna make a quick 30-40% on that. Then I'll be good. What is the volume you look at before getting in, guys? If I honestly tell you, I do not really look at the volume a lot. It's been a long time. But the thing is, guys, if I'm trading volume, if I'm trading breakout, then I definitely look at the volume. If the volume is there or not. If I'm trading a breakout on 15-30 minute time frame, then look at the volume. But the thing is, if I am trading supply and demand, then it's then you can definitely use volume. But I mainly trade supply and demand. But the thing is, if I'm confident enough in my demand zone, then then the volume will eventually come to the trade later on. So I just do not wait for wait for the volume to confirm. But one way to use volume is that if, let's say, you are trading a supply and demand, you are trading the supply and demand, and then price goes in this demand zone, and as soon as price goes into the demand zone, um, price goes in demand zone, and then the see a uptick in the volume, price is in demand zone and it's already down, let's say, 10 points off the highs. At this point, I would look at the volume, and then I would see, okay, this is a daily demand zone, volume is coming in, it's a high volume bar. So I'm just gonna get in. So that means big money is getting in the demand zone. Big money is definitely not selling in this in demand, or same goes with supply. And then if you look at my volume bars, they're all one color, they're not two colors. And the reason is because if red or green, it does not matter at all. Red volume bar or green volume bar does not matter. So if you have it one volume bar, just keeps in check, and then you really and then you do not get biased looking at volume bar here. And you just want to look at the volume just by looking at if the volume is there or not. Red or green does not really matter. Right. Supply zone is a last low. Which quantity did you get into? $6 in, it was like $650, like $6. And supply and demand zone, guys, pretty easy to spot supply and demand zone. No, I do not trade crypto. I do not trade crypto. No, it was just it was a phase that I like to trade crypto, but not a regular thing. Options and the futures the way. Options 80% of the time, 90% of the time. This is where I find my bread and butter in options. How do you determine supply zone and demand zone? Pretty easy stuff. All you need to do is I'm gonna explain you here in a blank screen. So think about this as price is making higher highs and higher lows, right? And then price is making higher highs and higher lows. And then this is what you need to identify: if price is making higher highs or higher lows, or price is making lower highs and lower lows. So if price, guys, think about, if price is making higher highs and higher lows, that means the structure is bullish, price is moving higher. So that means any dips that is coming into demand zone, I'm going to buy. And then how I'm going to identify the demand zone? That demand zone is going to be the prior swing lows. And then same goes with supply zone. And then the supply zone is going to be the prior swing highs. So in this case, price is moving higher, and then this is going to be my demand zone right here. And then price making this higher highs, this price made a highs, higher lows, new higher highs. And then when price comes back into this demand zone, this is where I'm gonna go long with the stop loss at this prior swing lows here, right? And then I'm gonna go long in this demand zone with a target of new highs, because structure is bullish, price is making higher highs and higher lows. So my expectation would be that price is gonna move higher again from that particular demand zone. And same goes with the supply zone, guys. Price is making lower highs and lower lows. And then once I know the structure is changed, price is making lower lows and lower highs, I'm gonna wait for another lower highs into the supply zone. I'm gonna wait for price to tag that zone, and then I'm gonna get into a short with a target of new lows. Again, guys, time frame does not matter. You just learn about that, whatever I told you here, it's just one of the basics things, and then you can apply in supply and demand zone, and then it will work in every single time frame. And I can show you examples right now, in 1 minute time frame. I can show you the same examples on a monthly time frame. So I still have some 5 minutes. So let's look at some of the examples here on hourly time frame to see what I'm talking about. Let's look at ES to see what I'm talking here on 2 hours. I just spice more clean. As pretty clean examples here on SPY. Price formed this demand zone right here. This demand zone caused a break of structure. Looking at it, let's look at looking at it in a smaller time frame. Is this was a demand zone. How did it cause a break of structure? Looking at price made a highs, price made a low, price made a highs, right? That means that is a clean demand zone to play. So I'm gonna wait for price to come back to this demand zone, and then whenever I get a tag of this demand zone, I'm gonna go long again. Looking at 2 hours again, look what happened. As soon as price came into this demand zone, boom, instant bounce of that zone right here. And then same goes right here. This demand zone caused a break of structure, price made a new highs, and then price came into this demand zone, boom, another bounce, and then this bounce also caused a break of structure here in making this higher lows right here. So now I'm gonna stretch this to the right. Now this is my new demand zone. Came here again, boom, another bounce, right? And then this is what I'm expecting again from going forward, because this is the base that caused a break of structure. Price made this new all-time highs here. This was the base that formed, and then if price comes back into this base, this is where I'm going to go long again. This is why I'm telling you guys, this is the zone that I'm looking at to go long, because I know this is a valid supply zone that basically 90% of the profitable traders looking at to go long. Like 5-minute time zone, it looked horrible. Let's look at 5 minutes. Right? It's best to not use any indicators on it. Looking at 5 minutes right here, this is one of the demand zone that price formed, and look what happened. Price came into this demand zone, gap down. This is one of the trade that we took this morning. In the premium, that I alerted longs as soon as price tagged this demand zone, and then we got a move higher for I think 15-20. I think it was a 20% trade for at the money calls, right? So I think it was a 30 or 40 bucks per contract that we made. So clean demand zone, look right here. This demand zone caused a break of structure. Price made a higher highs, higher lows, and then made a new highs here, gapped up. So that means this base caused a break of structure. Price came into it in this zone and then moved higher from it, right? Again, guys, if you wanna become a profitable trader, right, the one thing that what I did back in the days is I stopped playing out of the money calls and I started playing out of the money puts, right? So I was basically playing most of my trades were in the money or at the money, and then they were 3 to 7 days out, calls or puts I was playing. Because thing is, as a new trader, you don't know the real direction of the market, where it's going to head. So you just want to protect yourself and then buy that insurance, right? And then if you're buying in the money contracts, and that just gives you a lot of time to hold on to a trade, and then you do not get a lot of premium on those particular contracts. So I know they are expensive contracts, but think about it. Let's say you're putting $500 in your trade, and then you're buying 10 out of the money contracts for 50 cents each on intraday basis, right? And then but what you can do is you can use the same $500, and then you can buy 3 days out contracts. Add the money contract is going to be around maximum $150 per contract, and then you're playing with three contracts, or even 2 contracts. If you're playing $200 contract at the money, and then if price moves in your way, if one or 2 points, and then the delta on that contract is around 50 cents or to 60 cents, and then you can definitely make $50 to $50 on one contract if price goes in your favor on one point. 1 point is not a lot. 1 point is not a lot. Price moves $1. SPY moves all the time. So if you catch 1 point, that's and in the money at the money contracts, you're making $50 on that particular contract, and then you making from $500 investment, you making straight $700 to $800 you can turn into easy, right? But if you playing $500 with 0 dates, price goes sideways, and then boom, you get a minus 50%, and then you hold on to it for all day, and then your 500 goes to zero by end of the day. And then in that way you can just manage it better, unless you're by the time till you become profitable, then you can come to zero days. I know they look pretty exciting. They can go 1,000%, 500%, but holding up to that level, 500%, 1,000%, you just cannot hold it. I can guarantee that. Being there, you need a lot of experience, you need a lot of patience for any trade to hold up to even 500%, even to then 1,000% is just a rare mark to hold, guys. So I would only recommend playing in the money, at the money, calls or puts, with the at least a week out, and then get that 15-20% easy money. And then once you grow your account, then you can slowly switch to zero dates or the weekly contracts and out the money too. Right. So this is something that I wished I knew earlier, and then I would have saved a lot of time, a lot of money, but no one was there to teach me that. But so I said definitely new traders should follow this advice to the T. Guys, any more questions you guys have, do let me know in the chat. Again, guys, I hope you guys liking this almost everyday sessions now, because I just got a lot of free time, and then just trading is boring when you do it alone. And then the only reason is I come online, so I get to talk to you guys. And then if you guys have any questions, and then I can clear it too at the same time, especially for those who are working full time, or those who goes to school and stuff. And then you can definitely clear up your questions at one place. So again, as promised, I will make it a permanent thing, on doing this lives, doing this Q&As going forward. So with that, I'm gonna take a leave. It's a 40-minute session. I will upload it later on the YouTube. Again, if you're not a premium member, consider joining it. I alert most of my plays in the premium channel, and then we have a lot of premium member, those who are with us for almost 3 to 4 years now. If you consider it, I will drop a link later today, with the discount, so you can definitely get in and then enjoy the premium services. All right, so have a good day, guys. I will catch you guys sometime tomorrow or Wednesday with another live. Have a great day.